Okay, everyone, I think we're going to get started. So again, welcome to the Palisades Recovery Coalition Insurance Town Hall. This is the second of four that we plan for everyone. Um, our first one was in person. It was in October, I want to say. And we held it in person. It was actually quite successful. I will share my screen with you in a few minutes because out of that, and Emily, you were there, so thank you. You came all the way down to SoCal. But out of that session, we were able to create an FAQ, which is on our website. We've also shared it with the community. We've also shared it with lawmakers and even the mayor's office, which asked us if any priorities emerged from that session that we had in person around insurance. And we found that there had been at least 10 priorities that we were able to flag for them. So I will share my screen. I will share with you those priorities that we were able to announce. And hopefully out of this session, we will also be able to emerge with an FAQ and a set of priorities. So it might make sense to you all that we address different things at each of these town halls. The first one was a conversation around policies and legislation. It was a little bit of a look back, but it was mostly a look ahead. It was a look ahead at what kind of legislation and what sort of policy conversations can be useful to communities like ours, Pacific Palisades, a high fire severity zone community that has devastatingly burned to the ground, but ostensibly will rise again and join many of our sister communities up and down the coast of California that are also high fire severity zones. So the solutions that we come up with here are going to be applicable to more communities than just ours. And so this conversation becomes that much more important. This town hall today is going to be focused on resilience. So we have with us, and I'll introduce everybody properly, but just so the audience knows, we have with us someone from an insurance company that has made a commitment to remain in high fire severity zones, obviously not without expecting some resilience, but has made a commitment to keep an eye on remaining in high fire severity zones. We have someone from insurance services, so I'm hoping we can speak to Christina from Venbrook about risk assessment and what that looks like from the point of view of all the people that she deals with. And those can be insurers, and they can also be surplus line insurers. So two different animals there. And then we have Emily, who's from United Policyholders. She can be the point of view of us, the consumers. And then we also have IBHS, which is the Insurance Institute for Business and Home Safety. And we have the Passive House Network. And I'm not sure I see them on the call yet. So let me know, Emily, and Laura and Susie, let me know if you're on the call. So we can have a conversation about insurability, and we can have a conversation about what it looks like to rebuild with some resilience. With a lot of perspectives at the table. So I welcome you all. I thank you all for taking part in this conversation. To our guests, I thank you for making your time available to be here. Again, hopefully this is only the beginning, not the end of this long conversation around insurance as we rebuild. So I will begin with Victor Joseph, who is the President and Chief Operating Officer of Mercury Insurance. Victor, it was a pleasure to hear you speak a few months ago at the Department of Angels Symposium around insurability. And so I asked you then if you would join us, and I thank you again for making the time to be here. So go ahead, and you've got the floor.
Happy to be here. Thank you. And I do have, I think, something for you to share on the screen. But before I jump into it, I'll just give a bit of background on Mercury. We're the third largest property insurance company in California, admitted lines, so we don't do surplus lines. And we're the fastest growing, one of the fastest growing in the top 10, if you don't include M&A on property insurance. We've continued to grow this year, despite what's happened with the fires. I think we feel really bullish about what will happen in the state and how we can play a positive role in helping the state become more resilient. So I think you'll see that as we go through our discounts, and I can talk through them. The discounts and kind of how they're presented there is a good way for me to explain some of how we look at what makes a house safe and more generally what makes a community safe against a wildfire. A few things before we jump into that. If you do have questions for me, I'm happy to talk to you offline. I met with another group of residents in the Palisades a couple of weeks ago and had some discussions with the homeowner there about their house, and I'm gonna try to visit it at some point to give them some advice just in person if it's helpful. They got some pretty substantial quotes for more work they can do, and I don't think you have to spend that much money to be prepared for a fire, but I'm always happy to share my 2 cents if it's helpful. If you do have a question about a claim, if you have a claim with Mercury, I probably can't help you with that on this call. You can send me an email at vjoseph@mercuryinsurance.com and I can look into it. And I've at times gotten a bit more information on different claims and hopefully been helpful to our customers in those situations. So with all that said, I'll go ahead and jump in. I don't know if Miriam, if you have it, or if I should just share my screen. Let me know what's easier.
You have screen share, so you'll be
Oh, I
able to
do.
share your screen. And
Okay.
I do want to also say to the audience, if you do have questions, please put them in the chat. We'll take them, of course, but we'll first hear the presentations. Thank you, Victor.
Okay, bear with me for a second. I'm gonna find that flyer and I'm gonna open it up. Just give me a second here. While I look for that, I'll say that so every insurance company is going to be different with this. I think one thing that I do have to stress here quite a bit is everything I'm going to share with you for the most part, I can only really speak to Mercury's viewpoint on this. So I think as a company, we've tried to be fairly adventurous or flexible with a lot of what we want to offer in terms of discounts and availability. You may not find this with other companies. I don't speak for the industry. I don't represent the industry. I can only share our views. So I'm going to open that up here and share my screen. Bear with me. It's slow. Hmm. Okay, while that takes a
I was
very long time to open, here it goes. Okay,
okay.
let me share. Sorry about that.
No problem at
Okay,
all.
let's open it here. Okay, and I'm going to try to zoom in on this so it's legible. So this is a flyer that we have that goes through different discounts that we offer. I'm going to talk through the discounts because I think it's the best way to just understand how we look at different things that matter for a house. So I think by now, let me know if you can't see my screen, and if it's not legible, I'll zoom in further. But hopefully this
It's
is
perfect. We can see it
okay.
and it is legible.
Okay, great.
Yeah.
So there's three classes of discounts that we offer, and it's going to seem a little bit convoluted. I'll explain a bit of why this is. So there's the first set of discounts that we are statutorily required to offer. The California Department of Insurance has a set of discounts that they tie to single features of homes, and insurance companies have to offer a discount for every individual feature. Again, not speaking for the industry, but if you look at what insurance companies have done, I would say that they generally haven't put quite as much weight on that approach to providing wildfire discounts and acceptability. Generally, the approach that insurance companies have taken, including Mercury, is we do like to see a combination of things that are done. And once you achieve a combination of things, that combination yields a relatively, at least for us, a relatively large discount. Whereas doing one of the four things or one of the 10 things will yield a small discount because that's the statutory requirement. We have to offer that. But when we look at wildfire, we're really looking for where there are points of weakness in a home and a structure, and we'd like to see a range of things done simultaneously to really create that sort of comprehensive protection that you'd want to have. For example, if you do a lot of the right things, but you don't have ember resistant vents, that is a lot more concerning to us. So you could have the right siding, you could have the right roof, you could have the right windows, etc. But if you have a few points of vulnerability in an extreme event, they're likely to be exploited. So our discounts, as I'll go through this, you'll see are very heavily weighted toward a combination of things being done. Now, all that said, we do have to offer these kind of individual single discounts per item. So I'll talk about some of those first. So for Mercury, each one of these items is only a 0.5% off the wildfire premium, so not a significant amount. But you can still get them in addition to the combination discount. So it actually kind of stacks nicely once everything is kind of in. So we have some requirements around defensible space. For this one, for this set of discounts, the kind of simple message is clear out pretty much everything combustible within 5 feet. I'm going to talk about this a little bit more later. We're going to be making some changes at Mercury around this to be a bit more lax. I will say that that is not the standard that I think will generally be used by other companies or even by IBHS, which I think has a lot of strong research. And it sounds like we have someone from IBHS who can talk more about that. 0 to 5 feet, we want that cleared. We look for some things further out as well, but really the emphasis with this is on 0 to 5 feet. If you deal with that, you get a small discount. Then you get into some home hardening features. And again, each component of these adds half a point off your wildfire premium. Enclosed eaves, fire resistant vents, I just talked about those. Dual pane windows, we like them to be tempered as well, but technically they just have to be dual pane. At the base of the house, and this isn't applicable to a lot of homes, I expect that will be in the Palisades, but in some parts of the state, you do see wood siding or other siding that is more combustible. We at least want the 6 inches off the ground to be non-combustible. Now, a lot of homes down here in Southern California and more populated areas, newer construction at least, you do tend to see more non-combustible siding just generally. You'll see stucco, you might see hardy board, which is non-combustible. You might see other things, but for most homes, that it tends to be crossed off. Class A roof is also at this point in California, that's pretty common in most parts of the state. Tile roof, asphalt roof, it's fine. Up in the hills, you might see metal roofs where they deal with snow. Great. But we treat all of those the same when it comes to wildfire exposure. Now, moving into kind of the combination discounts, and this is where you start to get much more significant discounts on your rate. And I think you should also think about that sort of directionally being consistent with a company's interest in insuring your home. So steeper discount, you can also think about a company will want to sell more policies in an area. Because one of the things that companies have to kind of grapple with, it's not just the price that you're offering to each homeowner in a neighborhood or a community. How many of those homes are you writing? And there's a point at which companies will get nervous about how much of their claims paying ability, their capital, is exposed to a large event that could hit an area and really impair the company. So they have limits, they have ways that they kind of manage their aggregation or concentration of homes in any one community. And the more mitigated those homes in the community, the more you'd expect them to write maybe more homes than they otherwise would. So there's some directional correlation, or there's some consistency there with discounts and appetite or willingness to sell more policies in an area. So getting into the first kind of batch of combinations, IBHS. So this is a standard by now that I expect a lot of residents, a lot of people have heard of. It's gotten a lot more publicity since the fires. You can go to their website there, wildfireprepare.org. It goes through all the different features. I'm not going to go through all of them in detail here, but it really covers everything. So it covers some of the things I mentioned earlier. You've got siding, you've got roof, you've got vents, you've got windows, you've got defensible space. But beyond that, you've also got some other features. A lot of homes that we see that are lost in fires are the fire starts near the fence. A lot of homes have wood fences. Wood fences are cheaper. They also look nice. But wood fences tend to ignite. And once they ignite, they carry the fire across the fence, and those fences ultimately end up connecting to a building, a structure. And they do, unfortunately, a very good job of transferring that fire to the structure itself. So when we look at that, at least with that last 5 feet of fence, right up where it joins to the structure, we want that to be something that's non-combustible. And I've seen a lot of homes in areas where they've rebuilt, like in Paradise, I should say, where you'll see wood fence, but that last 5 foot section is wrought iron or a nice metal section of fence that it can look pretty good too. You know, it's a little bit more cost, but relative to the overall costs of what can happen and the impacts it could potentially have on your insurance rates, it's very much a worthwhile thing to do, if nothing else, for peace of mind. There's some other features there as well, but again, I'm not going to go through every single one of them. You can read more about that on the website. For these, you have to get a designation. You have to get it certified, so to speak, from IBHS. So there's a process that you have to go through with that. They come out, they look at the house, they inspect different things. And if you pass that, then I think it lasts, I want to say for 3 years. But again, if someone is on the phone from IBHS, they're in a much better position than I am to speak to that. Now, Mercury has its own wildfire discount as well. This is the first batch I shared are the statutory, those are required by the regulator. Then there's the IBHS standard, which is great. There's a lot of good research behind it. Now, we also have our own standard here. It's a little bit easier to attain than the IBHS discount. It's not quite as steep in some respects. It can be up to 25%. But I do want to say this is what's filed with the department, but I already know that we're going to be changing this and we're going to be making it probably a little bit steeper, so more generous. And I think we'll probably be a bit more flexible on certain dimensions. And I know this is something that is controversial, and I'm not trying to say that we're against having nothing within 5 feet, but we will, as a company, we've decided that we'll allow for some vegetation within 5 feet, a very small amount in certain areas, kept to some very specific standards. We'll have a lot of requirements with it. But if you have well irrigated grass, for instance, and it's cut, it's maintained, and you have stucco siding, and you have the right vents, and you have all these other things that are kind of correct and built to the right standard. As a company, we've made a decision that we'll be more tolerant of certain plants kept low, kept irrigated, if all the other features of your house kind of meet our requirements and our standards. So I think for us, we're willing to be a little bit more flexible with that. I'm not saying that to criticize an IBHS standard or what the fire service or others are saying. I think it is overall, I think, generally safer to have nothing within the 5 feet. It's a lot more straightforward. It's simpler. But as a company, we want to make sure that we can offer kind of a range of options to people that we feel comfortable with from a risk standpoint. So what you're seeing here will become a bit more generous and a bit more relaxed as we make some more changes. And we're going to put that in front of the department soon to see how they feel about it. One other thing I didn't mention here, this isn't as common in this area, but if you do have a deck, you do need to do some things to make sure that it's cut clear underneath. That's one major issue for homes, especially in the hills where they tend to use more of these, is you'll have embers or you'll have fires that will kind of get under it and will cause big problems and it'll take out the whole house. So you got to make sure there's not stuff under that. You have to screen it off. Again, if you're in an area that's flat, it's usually not as much of an issue. But once you get into the hills, these start to become more common. It's another thing that you have to think about. Most of the stuff here is sort of duplicative of what you saw earlier with IBHS, although we do want at least one pane tempered. If you're rebuilding right now, what I would suggest is at the very least, try to follow Chapter 7A standards. It brings in a lot of this stuff here. Make sure that that last 5 foot section of fence near your house is non-combustible. And then from a defensible space standpoint, Mercury is going to be, I think, a little bit more flexible with that. But if you want to maintain a lot of flexibility with the whole range of different companies you could be insured with, it's best to have nothing combustible, even something like grass. I mean, you might use hardscape and just keep that area completely clear. And that probably gives you the most flexibility with most carriers. I don't know that many other carriers are going to take the approach that we will. Again, I don't speak for them, but just based off what I've seen and what I've read, I think there's a lot of momentum behind having absolutely nothing in that 0 to 5 feet. I understand it, but I think we've decided that we want to provide people with some other options too. One other feature that we bring into this, and there's a reason there's a big variance in the discount, is how far the structures are from each other. Now, this is not something that you can really control that easily, which is part of why I'm not talking much about it. I think we'll steepen things and make it more generous, but the reality is the further you are from your neighbor, once you get past 10 feet, once you get past 30 feet, in our minds, it does make a difference. And it is something that will offer steeper discounts to homes that are further apart. I know that doesn't sound fair, because you don't choose necessarily where the homes are near you, but we do believe it's a very significant factor when you're thinking about urban conflagrations. And when you have areas like Paradise, where the homes now, as they've rebuilt, they generally are more than 30 feet apart. When you're thinking about an urban conflagration, that's a much lower likelihood to happen in an area like that, where the homes aren't even close enough where if one ignites, it can sort of spread as it does like a disease to the homes that are adjacent to it because they're too far for that. So that is a factor that we look at as well. And there are parts of the Palisades, and a lot of Los Angeles is like this, but the homes are pretty close together, which is it's problematic, unfortunately, when it comes to an urban configuration. I think that's most of the substantive kind of relevant. Oh, there's one other discount here, but this one's very significant. It's half off, but it's also a very specific type of construction. This is not for everybody, but if you do rebuild your house to a type 1 or type 2 standard, those are the definitions of those are right here. You basically are building a house out of steel and concrete. There are a few homes we insure that are like this. I've met with a few wildfire survivors who said, "Look, I don't want to have to worry about this ever again. The best chances I have are to build a house entirely out of concrete and steel." They do look they do look better than I thought they would have. They've come a long way in terms of how they're able to design them, and they look very similar, I think, to normal homes. There's still some noticeable differences, but if you pursue that approach, at least for Mercury, we provide a very steep credit to that because, I mean, really, when you look at the exterior, and for a lot of them, even the interior, there's very little that can ignite. A lot of these homes don't even have vents. So when you think about ember intrusion, you're in a much better position. So I suppose stepping back for a second, there's kind of four buckets of discounts we have. We have the discounts we're required to offer. They're fairly small, but they do stack with everything else I've mentioned. You have IBHS discounts, great standard, great to take a look at that and see if you can adhere to that. There's a set of Mercury discounts, which are still quite significant. They're a little bit more relaxed, a bit more attainable, and hopefully that resonates with consumers out there in homes to just make some changes. And then there's this rather extreme approach. If you're interested in concrete form construction, ICF homes, steel homes, those will be very effective as well. So those are my prepared remarks. I'm not sure if you'd like me to take questions now or just let me know how I can help.
That was excellent. Thank you. You teed up so much that we can ask about and follow up, but let's hear from everybody and then we'll come back around. Again, folks, if you have questions, please put them in the chat. I will try to monitor the chat. I'll also ask people to raise their hands once we're done. But that was excellent. Thank you, Victor. Lots of issues that we can dig into. I think next I'll go to Christina Oakes. Christina is the Executive VP of Private Client Services at Venbrook Insurance Services. She's the VP of the Private Client Division. And she has been a good part of my learning curve on insurance. So thank you for agreeing to come on. And Christina, I'll give you the floor.
Wonderful. Thank you so much, Miriam, for having me. I'm very excited to share some knowledge and expertise on the broker side of things, and I'll talk a little bit. I'll go ahead and share my screen with some items. Hopefully you guys can see.
Try it now, Christina.
I was going to say. Now, can you see the screen now?
Yes, very well.
Wonderful. Okay, so I want to talk a little bit about Venbrook Insurance and just a little bit of the difference between carrier versus broker. So Venbrook in itself, we're one of the two brokers really in this space that has a retail division, which is the property and casualty employee benefits division. We have our own in-house claims department, we have specialty programs, and then we also have our own wholesale division. So there's a lot of different moving parts when we're talking about insurance, and this is just kind of another run through of what that looks like visually. On the private client side, which is where my expertise comes into play, is on the residential side. And so when we partner with a lot of carriers such as Mercury, unfortunately, it seems to be that there's fewer and fewer admitted carriers to work with in the state. So when there is a carrier like Mercury on the admitted side, and when I say admitted, it's backed by the Department of Insurance. So there's heavy regulations and rules that those carriers have to follow in the best interest of consumers and homeowners here in California. And with that, there's a lot of risk that comes involved with California insurance market in and of itself. So not only are we dealing with wildfires, but there's also the threat of earthquake. And we're also seeing, due to excessive rains in the last several years, just parts of California that are starting to flood because we're not built for those excessive rainstorms. So trying to navigate the risk here in the state has become quite the challenge. And I would say to kind of earmark it right around 2017 when Woolsey Fire hit. It seems like once 2017 hit, it's just kind of been a continuing, ongoing discussion of how to manage risk here in the state. And when we're looking at that, we had a couple of decent years in, 22, 23. I was having a lot of carrier discussions towards the end of 2024 last year that sounded very positive, heading in the right direction of, some carriers wanting to open their doors a little bit. And then, fast forward January 7th, 2025 happened. So a lot of those conversations have shifted. And what I mean by that is, carriers, they have to be profitable in order to be around forever, to make good on their claims, to be able to pay out on their claims. Most carriers were losing right around 10 cents on the dollar that they were collecting. So it wasn't even a matter of being profitable. They were just trying to stop the hemorrhaging that they were seeing from the risk that's here in California. The California Fair Plan, which is not an insurance carrier, it's a state-funded program that the financial backing of it is entirely different than how an AM Best rated carrier would be. So Venbrook only partners with AM Best rated carriers. So any financial institution that's a B plus or lower, we will not partner or work with, just to do due diligence on our client's behalf. And the other thing that I will mention from the broker side is we are the liaison between carriers, the insurance carriers who are the underwriters, who are, they're pretty much in the driver's seat right now at this point. They are the ones that are, making the decisions on the risk mitigation that they want in order to take on a risk, where they're choosing to write a risk, what their total insurance value capacity is. And when I say total insurance value, if you look at your insurance policies, it's comprised of coverages A, B, C, D, E, and F. Your TIV is really focused around coverages A through D, which is your primary dwelling, your other structures, your anything detached, whether it be an ADU, a swimming pool, or a shed. Then coverage C is your contents, your personal property. If you were to take your home, dump it upside down, everything that were to fall out would pretty much be deemed as personal property. And then your coverage D, which is your loss of use, your temporary living arrangements, if you are displaced due to a claim or a loss. And it could be a total rebuild, or it could just be, a few weeks due to a water leak. So when we're looking at that, that's what insurance carriers are looking at, is how much TIV they're extending out. And the other thing to keep in mind is saturation and capacity. I think Victor touched on it a little bit, in that insurance carriers, after Paradise Fire, there was a few different carriers that were heavily, heavily saturated in that area. And what carriers learned is we can no longer be heavily saturated in one area because the risk is too big. It's not, Jane Smith has a kitchen fire. It's a giant wildfires coming through and wiping out neighborhoods and zip codes. And when one insurance carrier is heavily saturated in that area, they're the ones writing those loss settlement checks over and over and over again, potentially making a carrier go insolvent if they are taking on too much risk without being able to pay out on the claims effectively. So when we talk about risk mitigation, something else to keep in mind, and I know it can sometimes be frustrating and a lot of folks don't understand, and I think sharing this knowledge kind of opens that door and lifts the curtain up. When we say we go to market and we're looking at, which risks fit within certain carriers' appetites, you could be doing everything from soup to nuts with, gutter guards and mesh fences around crawl spaces and removing vegetation, and the home is built of non-combustible materials. You could still be declined from an insurance carrier if that carrier is already heavily saturated in that area. And it's not necessary, and it could just be, clients that have been with that carrier that have been grandfathered in. It's just every carrier has to diversify that risk. So they're looking to do so strategically. And the easiest way for an insurance carrier to get off of a risk is through a sale. So I do a lot of educational seminars with real estate agents and their offices. And the number one thing I get is, they work with the seller and they say, oh, the home's currently insured with Chubb, just go to Chubb. Well, Chubb has probably been waiting for the last several years to get off of that risk. So through sale, it's an easy way for Chubb to just kind of walk away and say, no, we really don't want it on our books. And since the title is transferring, it's an easy way for us to get off of it. So when you're talking to folks, because I also hear a lot of times, oh, my neighbor has this carrier, my neighbor has that carrier, does not guarantee that just because they live on your street and they're insured with one carrier, that you are also going to be able to be insured with that carrier. And the other thing to keep in mind is individual risk profile. So again, when I'm talking to real estate agents and I'm having to gather information on the buyer or the homeowner, that I get asked why all the time. And when we're doing underwriting due diligence, on the private risk side, we're underwriting not only the risk location, but we're also underwriting the individual, because one of the coverages, as I mentioned, there's A through F. E and F is related to liability and medical payments. So liability is a huge thing, and your general liability on your homeowners can pay out for a plethora of perils. It could be, libel, slander, any kind of defamation of character. It could be your dog bit someone. It could be someone got injured or, God forbid, drowned in your swimming pool. It could be a slip and fall at the home. There's a lot of different scenarios. It could be social media presence that we're seeing an uptick, I would say, in the last 5 to 10 years of cyberbullying. And just social media presence in general, and we call it keyboard courage. A lot of folks are suing over that stuff now, which, if the suit goes in one direction, your liability insurance on your homeowner's insurance is going to pay out. So again, when we're looking at risk profiles, it's location of risk, and then it's also the individual. So if that individual has been previously sued, if they are, athlete, entertainer, or it's again becoming more prevalent these days, but bloggers, YouTubers, and social influencers and stuff, if you have a strong social media presence, that could also be a deterrent from an insurance carrier. One thing I didn't jump to, and I can certainly share with Miriam after this, some resources for you folks. After the LA fires earlier this year, we did a couple of different panel discussions. I don't know if you can see in this little window, but we did Forward LA, and we hosted 2 different panel discussions, one in the Brentwood area for the Palisades individuals, and then one over in Pasadena for the Eaton Fire individuals. And we wanted to get in front of it because there's a lot of misinformation that you see on the news and when you're, talking with neighbors and family members and things and so on and so forth. So Venbrook really wanted to get the right information out there to clients and be a resource for folks like yourselves who are just looking for information and guidance and direction on that. So we put together a couple of these resources, and some of this is very much what I just kind of went through, kind of just basically breaking down your homeowner's insurance policies. And I know, Miriam, you had a previous panel earlier just talking about policy verbiage and language and whatnot. So this kind of breaks down all of your coverages, if you can still see the screen. And then also just some helpful things to keep note, a little bit about the FAIR plan, what a difference in conditions policy is. I know a lot of people, never heard that vernacular before or that verbiage before, but it should be written along with every California FAIR plan policy, because again, the California FAIR plan is not a homeowner's insurance policy. It's really just a fire insurance policy. Fire, smoke, lightning, and internal explosion is really all that policy is covering. The difference in conditions is also referred to as a wrap. You need both to make a pseudo homeowner's policy. The difference in conditions is going to provide you that liability coverage, that med pay, any water related peril, mold, ordinance, or law, that's not being included in that FAIR plan policy. So both of those should always be working in tandem with one another because they're both protecting the same asset. However, the loss settlements and the verbiage in both of those contracts operate very, very differently. And then on this resource, I have some different just risk management. And I'll get into a little bit about the carrier dynamic and assessing risk and what that looks like, but mitigation efforts and just different resources for folks to kind of go to and look into. And also, obviously, looking to protect your overall asset portfolio in general. When we talk about excess liability and umbrella insurance, it's not protecting your home or your cars, it's protecting your assets and your net worth if, God forbid, you find yourself in a frivolous lawsuit. And to kind of piggyback off the risk mitigation, we also I get to go to these fun insurance seminars. I actually just went to one last week, and we work with a lot of third-party vendors. At no point is Venbrook, there's no formal partnership in place. It's just resources that, they're not advertising on the radio, they're not advertising on TV. It's going it's brokers like myself learning about these third-party companies out there to better educate my clients, you folks, on what is available to safeguard your home, to mitigate the risk as much as possible. One of them being Embers Protection Services. I just got their information. If you want to talk about home hardening, they do a phenomenal job. They're local to Southern California, but really just kind of going from A to Z and putting in properties in the right path to being able to withstand a wildfire potentially. And what I was going to say is that even though we have the wildfire risk here in the state, the number one claim we're still seeing from our carriers is water. So kind of pivoting over to the risk assessment conversation of it all is every carrier is going to be a little bit different. So Mercury shared some of the credits that they offer. Not every carrier offers the same credits or the same percentage for the credits. What is important to know is if a carrier is offering credits to safeguard, that's two steps in the right direction. In my world, if a risk doesn't fit within the normal admitted marketplace, and when I say admitted markets, again, it's the insurance carriers that are backed by the Department of Insurance. What is also referred to as surplus lines E&S is your not admitted options. And on the non-admitted side, there's a lot more creativity and flexibility that we can do, especially with larger homes. And when I say larger, I would say maybe 5 million coverage A, your dwelling and above. There's some carriers out there. I know Chubb is moving all of their property policies that are 25 million and above over to their E&S paper that were previously written on their admitted contract. They're automatically getting shifted over to their E&S contract just due to the ability to be able to charge more in rate for the risk that they're taking on. And that risk could be high wildfire score. It could be a wildfire score of, 89. They could have a wood shake roof. They could have older plumbing on the home. There's a lot of different risk characteristics that carriers are looking at to see if it is a risk that they want on their book of business. And it's not just fire related. So when we're talking about things that folks can do moving forward, kind of getting used to this new insurance environment that we're in, is automatic water shutoff devices. If you're asking me, I could very well see them being as mandated as a smoke detector in a home. And really what they do is they monitor your daily usage of water in the home. And if if the device that's attached to the plumbing, you do need a certified plumber to install these devices. But they're all controlled on your app, and it will shut off the water supply if it's detecting that there's a pinprick hole in your plumbing, or if one of the appliances is you're away on vacation and one of your appliances is overflowing. From a carrier's perspective, you might still have some damage. There might still be a loss there, but that loss could look at $8,000 to $10,000 versus $200,000 to $300,000. So trying to really do what's within our control and ability as homeowners and protecting these assets. The automatic water shutoff devices I see being a thing that's going to be very, very prominent and talked about in the next several years. Right now, it's kind of, hey, if you have it, we'll give you a credit. I could very well see it in 10 years being, mandated. You need to have it. Centrally reported burglar and fire alarms. We're seeing a lot of our carriers, if you don't have it at the time of binding, it's mandated that you get it within the first 30 days. Otherwise, coverage will be canceled. So getting the right security in your homes, especially in Los Angeles County and other parts of California, we're seeing an uptick in burglaries and house robberies and things of that nature. So making sure that you have burglar alarms, you have in-home safes, that those safes are bolted to the ground, that you have security cameras on presence. If you live in a gated community or your property is gated, or you live in an HOA where there's a 24/7 patrol monitoring, all of these things can, one, not only offer you credits with some certain insurance carriers, but sometimes, and I talk about this a lot with, again, real estate agents, is that some of that stuff, even if it doesn't offer you a credit, when I go to my underwriters and have that discussion, because again, I'm really advocating for my clients, you guys, and trying to paint the best picture possible to an underwriter and saying, hey, they spent the money to install a fire suppression system. They have an automatic water shutoff. They're doing all of these things. What terms can you offer me? It could make an underwriter go from just, no, we don't want the risk, to maybe, to then yes. And if the answer is yes, then it's a matter of my job is really to negotiate on your behalf and getting you the most amount of coverage, the best coverage possible, affordable, that also fits in your premium threshold and your premium budget, because that's probably the most important conversation that I have with all my clients is what is your premium threshold? If you tell me, I'm not paying $100,000 or more for my homeowner's insurance, and I'm getting indications from carriers that all the terms are going to be $100,000 or more, it's not even worth the conversation. We're going to pivot into a more creative process to try and get you some coverage or as much coverage that's going to fit within your day-to-day budget. So I think that premium discussion is super important. And I would say, I'm happy to share as many resources as I have in my holster to give you guys not only, like I said, the credits, but also potentially turn your risk from a no into a maybe and a maybe into a yes. And the last thing that I will say, sorry, Miriam, the last thing I will say is plumbing is a big thing. If you're plumbing in your home or as you're building your homes, 20 to 25 years, a lot of underwriters are wanting to see the home get completely replumbed. Again, going back to the water loss being the most prevalent situation that we're seeing, older plumbing is really the root cause of it. So again, just daily maintenance, doing your due diligence as a homeowner and installing the technology and the devices that are out there, I think will really change the conversation for a lot of folks.
Thank you so much, Christina. That was incredibly good information. Not only are people texting me and telling me that that was great information, but in the chat, as you can see, people would like to know if we can share your slides, and I think we will.
Yeah.
It sounds from both you and Victor that insurance is a layered thing. It's not one thing that makes a home insurable. It sounds like it's a bunch of layered things, and it's not always about resilience, which is what we've been hyper focused on because of the devastation from the fire. It sounds like there are a lot of things you can do to make yourself insurable or to drive prices down, and I have some questions for you guys that we'll come back to. Emily, if it's okay, I'm going to switch over to you. United Policyholders, you can speak from a consumer and a consumer protection point of view. Go ahead and share with us what you were going to share. I was going to ask you, though, to please explain to everyone on the call the difference between the admitted carriers and the surplus line insurers.
Absolutely.
Okay.
Yeah, so that's a really great
and
that's great feedback. Here, do you have another thing you want me to?
No, I was going to give you the ability to share your screen if you'd like to, but feel free to speak.
Yeah, thank you so much. I just want to say thank you for having us here. I was very very heartened to hear what both Christina and Victor have had to say so far. Just the fact that we're having this conversation is very, very important.
Emily, tell us the role of United Policyholders too.
I will.
Okay.
So United Policyholders is, I'm just making sure that I'm sharing. Here we go. Sorry, I hit the slideshow. Well, here we're going to get a little snapshot. United Policyholders is a nonprofit organization. We've been around for 30 years. So, sorry guys. There we go. All right. There we go. This is so unlike me. I usually don't have tech troubles. Thank you. So the main thing I want everyone to remember as we're going through this is that we are a nonprofit. We don't take money from insurance companies and we don't sell insurance. But we're a consumer advocacy organization. We're doing a lot of work right now after the fires, right? We are doing workshops to help move forward each step of the recovery, right? This is a long recovery. But we also have a preparedness program in which we're helping people figure out, how to be more prepared in terms of their insurance. And really what that's looking like nowadays, up and down the state of California, is how can people keep having access to insurance? We're seeing more and more in the general conversation that there are fewer options and that those options are very high. So I just wanted to lay that out there as we're talking about this. And then we also have an advocacy program that focuses on how can we, one, strengthen the laws to protect policyholders, to protect the people, and to provide more flexibility in these processes. So I will go through these pretty quickly. I do want to make sure we have plenty of time for questions because a lot of these concepts can be a little tricky. So like I said, There are a few options right now in California, and prices are high. We are so delighted with what Mercury has done to step up and open up and be willing to write in a creative way, right? That's what we heard. We heard him say that not only are they following the law, but they're thinking about it thoughtfully, right? So we heard yes, zone zero is an important step, and we're gonna see what we can do about that, right? We're also gonna be doing it in a thoughtful way, and that's what we want to hear from more insurance companies, and we haven't just yet. Um, a reminder that Los Angeles County, and if your home was destroyed in a wildfire, you have a non-renewal moratorium in place with your insurance, right? So your insurance right now cannot drop you, and that is 2 years from the start of your fire. And then if your home was not destroyed, you have a 1 year moratorium in place, and that it goes to adjacent zip codes as well. So it's a little larger than just on that fire perimeter, but the community right now has this protection that was one of the things that we helped get in place to just kind of cool the market down when something really big happens. Like we don't want insurance companies, I should say, to be skittish when something like this has happened, because that really hurts the people, the policyholders in an area. So we have these in place right now, and so that's just something to remember. And then we also have these laws that insurance companies are being required, with the passage of the Safer from Wildfires regulations, to offer some sort of discount. And what we're seeing is, some insurance companies are stepping up, and some are perhaps dragging their feet. Perhaps in that rate filing process, we're not seeing them loud and proud of like how they are stepping up to help everybody, right? Um, and so the reason that I brought that up is because the goal after you rebuild your home is hopefully to get insurance through an admitted carrier. An admitted carrier is, you think of your name brand carriers, right? You think of the ones that you kind of know. They are regulated by the Department of Insurance, and they are backed by CIGA, which is the California Insurance Guarantee Act, which means that if they become insolvent, if they essentially, can't pay their claims, there is a backstop there, right? And so that is an important thing. That is is the ideal. But the non-admitted or surplus lines or excess insurance, that's all another bucket of insurance companies. And what that is that is your second best option, right? They can often and maybe it is your best option, really. Like it depends on you. That's why working with an independent broker is your best bet, because they'll be able to see what you have and what your property situation is, and go over your options with you. But they are not backed by they don't have that guarantee SIGA behind them. That's one point. The other point is that they they do not have to put their rates through the Department of Insurance, so your rates could go up at any time, right? It's not there, they don't have to go through that rate filing process. So that's something. Another thing is we're just concerned that there could be less consistency or more carve-outs of coverage. They can be more they can make different decisions on what they want to include in their policies because they're not in this admitted marketplace. There's also your government created programs like your California Fair Plan and the California Earthquake Authority, for instance, right? And then if you do not have insurance, but you do have a mortgage, if your mortgage company will put insurance on your home, but that really just covers the loan and their own assets, right? So that is not necessarily protecting you. That is not this well-rounded policy that we want to see. So those are the four main types of insurance companies. But I want to pivot to this whole the safer from wildfires, the wildfire mitigation, especially when we're talking about rebuilding, because what we've seen, and like Christina said, since pretty much 2017, this conversation started heating up, and it has just kind of continued in that direction, where wildfire mitigation and the importance of having standards of what it means to be what it means to have a safer home, safer from wildfires. It started, and then the experts have right now they're pretty much in agreement, right? There is a little bit of shift there of maybe we don't have to be so strict. Maybe we should really, have it more on a granular level. But keep in mind that each insurance company is its own business, right? And we as the people have to have some sort of consistency on, what are we able to do? What are we all in agreement for, right? And when everyone was in agreement in terms of what is included in those regulations that have to be required for that discount, the goal is that if you're doing these things, if you are rebuilding your home and it is up to this wildfire standard, then that should be accounted for, right? And so that's the main goal of it. That's the main piece. And so what we would say as consumer advocates is you have this opportunity right now if you are rebuilding. And we don't know what every single insurance company is going to offer yet. In terms of a standard, right? Of like, okay, like we saw, you will get up to 25% off if you're here, right? And if we're talking about, that you want to build a home that you can then insure after as well, right? For your own assets, your own financial safety, but also for your property value, because if you do rebuild and then you decide, oh gosh, I am too nervous living here, or whatever it may be, if whatever part of life comes next, if your home is not insurable, it is very also hard to sell it, right? So these are things that are interwoven into the ecosystem here. And so as we're rebuilding, because we don't have, which is on my wish list, honestly, a transparent list of like, this insurance company offers this much if you do this amount of a discount in one place where you'd be able to see, right? That would be fantastic for us to have access to, but that also doesn't cover the variable that, that like we heard about density or having too much insurance in one place, who is going to cover you? And so our advice is really to try and get to that wildfire prepared home standard. So this is base down here, and this is plus, those are the extra things. But you have an opportunity right now. And we've heard from many survivors who were, we've got 2017 Tubbs fire survivors on our team, right? We have been working the Marshall Fire in Colorado, where they're starting to have some of the similar issues around affordability and availability of insurance. And this is the opportunity where it's a lot harder to make the decision to tear down a fence that you just put up and replace it with non-combustible class 5 feet, or pieces like that. It's a lot harder to make those decisions of what if you're going to plant anything after it's already been done. So let's entered into the conversation, one, for wildfire safety, but two, this is the key to getting insurance right now and keeping insurance. And it's a tough piece. And, luckily we did have, I believe it was AB1 that was passed that allows the regulations to be morphed a little bit. So if there is a way for them to be a little more lenient, or there's new data that we can account for that. But that's an important piece, and I'm excited to hear what IBHS has to say next. A couple other things just to run through that, that is a law that they have to do that. Their progress is being made, but like I said, there isn't a lot of transparency in being able to shop around, right? That's why working with your independent broker is the key, because they have that knowledge base and they can help you save time. If they know that one insurance company isn't going to touch this kind of risk, they're not going to waste your time. And what we hear on our preparedness at preparedness fairs or whatever it might be is someone coming up and saying, I have called 10 insurance companies and they will not write insurance, and they are just exasperated by the whole process. And maybe they were going to an insurance company that us insurance wonks know hasn't written new coverage in 10 years, right? Or maybe they've gone to someone that's really not their type of risk, or they know they also have to bundle, or there's a certain amount of wealth for them to even open up and offer it. So, it's a whole marketplace. It is a whole complicated system. And so working with the professionals is a really key point there, but also know that the landscape is changing all of the time. Like, and if you get stuck in the California Fair Plan, it is your goal is also to get off of it, right? And to keep having that conversation. And really this nexus with wildfire mitigation is one of the keys to getting off of it. So on our website, if you want to hear more about this type of information, we've got the 90-minute version of the webinar. We've got a 3-minute version if you need to absorb a little less. And we're definitely trying to keep information flowing as much as we can, and give updates as we can. And then for our recovery efforts, I just wanted to stop and end it with, we're on November the 19th. We'll go more into the mechanics of rebuilding your home and hear more about the importance of trying to rebuild not only a resilient home but an insurable home, and some of the lessons learned from our team of what happens during the rebuilding process. So that one's here, November 9th. I believe that is it. So thank you so much, and I'm happy to answer questions when we're done with everything. Thank you.
Okay, sounds great. Thank you, Emily. That was great. I do have a couple of questions for you, so we'll come back around. One of them that I will queue up and you can answer when we come back is, so we are very much told, and I think everyone in the community has begun to understand, that the California Fair Plan is not an insurance policy. It's a catch-all, right? So it's presumably for people who were not able to or haven't been able to secure proper insurance. Apparently that was common because after the fire, we found out that there were a lot of people on the California Fair Plan, and that was not the best place to be. So my question for all of you, maybe you can answer, somebody's got to know, is there an ideal cap? I mean, Victor was talking about how you guys as private companies will assess risk, and you'll have sort of a cap in an area depending on how resilient people are, how exposed you are in an area. Is there an ideal number where the Fair Plan will say we're sort of tapped out, and insurers have to be a little bit more creative about insuring people? So just want to see if we can forever just unload into the California Fair Plan, or if the state is thinking about some sort of cap. Okay, so think about that. I'm going to go over to Laura Blowell from IBHS. Thank you so much for joining us. Let's make sure she's here, and then we'll go to Susie Harris from the Passive House Network after that. So Laura, just let me know that you're still here.
I am here.
Oh, wonderful.
You
From
can
the
hear me
Insurance
okay?
Institute for Business and Home Safety. Thank you so much. I think we are all more familiar with you now than we were on January or in early January. Most of us didn't know what IBHS was, and now we definitely know that you're there, and that is what we should aspire to. So I'll give you screen sharing. Feel free to give us your presentation. And then if you can, please also tell us a little bit about this Delta Fund that is out there. I'm sure it's finite, but there is a fund out there to help people go from Chapter 7 resilience to IBHS. So it'd be good to learn a little bit about that. Thank you.
All right. 1 second. Got people in my screen. Okay. Okay. So, Laura Blau, I've only been with IBHS since July, but I retired from the Orange County Fire Authority as Assistant Chief and Fire Marshal, and I currently chair the California Fire Safe Council. So I've been working in wildfire for quite a long time. IBHS, we are an independent nonprofit research organization funded by the insurance industry. So we work across all the perils: wind, rain, hail, and our most recent addition is wildfire, which we've been doing research on for the last 10 years and released our standard in 2022. And how we do our research is we have a big lab. You can see the fans behind me. That's a 60-foot wall of fans, and we can generate winds up to 120 miles an hour inside of our lab. And we build full-scale homes in the middle of our lab. We light a trench on fire between the fans and the home, and we blow embers at it. And we figure out how it burns down, how homes burn and catch on fire, and then what we can do about it. So you'll see on the left, traditional construction, on the right, after several iterations and burning homes, one that could survive the flame. And then when we go outside, we'll do things like ADU burns, things that are too hot even for our lab, and find out that home-to-home fire spread. So we spend a lot of time doing our book research, then we do full-scale fire testing, and then we ground truth it. We follow up on all of the major wildfires, and our scientists say, what we found in the lab, is it applicable in real life? So once we do that, our work is really focused, and our standard is focused on the intersection of natural disasters and the built environment. So we really concentrate with wildfire on conflagration. And so the three components of conflagration are drought, wind, and people. So wind is a huge factor. I have a slide on that in a second, but I do want to mention that these major fires that we have, I don't know if everybody has Watch Duty. It's a great app if you don't have it. You will see that there are lots of vegetation fires happening throughout California all year round. It's about 1% of those wildfires that turn into these conflagrations that cause 95% of the damage. But those are the ones that we have to be ready for, because even the smaller ones can cause damage, but this combination of conditions seems to be increasing. It's probably because of growing drought and more people. So we are really trying to find a way to get in front of that with our standards. So the reason I want to show this slide is, so without the wind, if you put your hand over a bonfire or something, you'll notice that it's the radiant heat isn't as intense as the convected heat when you put your hand on top, right? So radiant heat is one of the three factors of fire. It's embers, radiant heat, and direct flame. Direct flame is, of course, the more intense, and you'll see when the wind lays down that flame, you're not only getting what flame can touch, but the convected heat off the top, which can easily ignite a structure or vegetation. So just a little bit more on the science when we go out and ground truth is it starts as a wildfire, and then it's embers that cause 90% of the ignitions in a wildfire. So the embers come into the community, they land on vulnerable parts of, like Victor said, the fence, it's like a wick carrying a fire to your home, the vegetation, or the homes themselves. But we also have to take into consideration radiant heat and flame contact. So when we look at wildfires starting in a neighborhood, we quickly transition once those embers enter or on the edge of the interface. You can get the direct flame impingement or radiant heat. Now we have a conflagration. And the factors that control the severity are, again, like Victor was talking about, structure density, right? So the magic distance is 30 feet. Anything less than that, it is very easy to ignite a home if the one on next door to you is fully involved. But we are experimenting now with how do we harden the home to be able to get that ignition to be less likely. And we have found that 10 feet is a pretty good standard if all of the homes are hardened to Wildfire Prepared Plus. And I'll talk to you more about that in a second. Connective fuels. So you'll see that anytime the closer the homes are together, the more important those connective fuels are. And so that is anything that can bring the fire between the two structures. So that's everything from vegetation to outbuildings, fences, anything that is between the homes that is combustible. And then finally, the building materials themselves. And like I said, if we're experimenting now, our 2026 agenda is full of the home to home and ADU to home. How can we harden those so that we can get closer than 30 feet? I'm not going to show you this one, but this is the Marshall Fire. You heard Victor talk about that. It's December. That is snow on the ground, December of 2021. And a number of homes were lost, again, in a conflagration. And I'm not going to play the video. I don't like to show it to survivors, but I am going to show you the recreation of it, because what's important is a lot of people, when I'm working on the rebuild with Resiliency Company and others, is what good is all of this? Because that was a wildfire that spread from home to home. So why should I take all these other measures? So you see that it goes down the block, and that's what the video shows too. It can stop at a street. So even though your homes might not be completely hardened and less than 10 feet apart, you can stop the embers from lighting the home that's across the street with the spacing. So just, when you hear people talk about there's nothing we could have done, the fire service says there was nothing they can do, we don't buy that. Our research does not support that theory. Okay, so this is a little bit on the ground truthing in Zone 0. I know it's a hot issue in California, but why we believe in it so heavily, again, it's our research, and it's also our ground truthing. So this is after the Palisades and Eaton fires. This also, I will say, these homes are standing most likely because of firefighter intervention, because we can only go to damaged homes. We can't tell and recreate what happened in a home that's in rubble. So you heard both Victor and Emily talk about the fences. That last 5 feet, this was a wooden fence, so they had it exactly backwards, right? They had a combustible fence with a non-combustible wall. So that last 5 feet, it's really important. The plants are important. Next to your home in the 5-foot zone, they will get up into the eaves, and even if you box your eaves, they can impinge on the windows and the vents. We found out synthetic lawn burns really well and can bring the fire to your fence. If your fence is combustible, bring that to your home. This was a trash can right here in front of this. This one surprised us a little. So we went back to our lab after reviewing these fires and filled a recyclable container half full of trash, lit it on fire with our sensors. It's equivalent to 3.5 gallons of gasoline. That's how much heat it puts out. So that's why it's so important. A lot of people, if you don't have, I live in Orange County. I'm in a very high fire hazard severity zone. Our homes were built in 90. So we became FireWise in August, and we are working right now we're just starting small with vents and veg, we call it. And so we're screening our vents and working on our 5-foot zones. And so if you don't have 5 feet, I have a 5,000 square foot lot, same size as all my neighbors. And we're just making out on red flag days, the combustible cushions on our non-combustible furniture, and all of our trash cans go in the garage. I know you don't want to keep them there all year round. I wouldn't do that either. And again, more plants. And then the 5 to 30 feet. So this is another one that surprised us. We found a number of homes that were ignited through hot tubs. So we filled a hot tub full of water, tested it in our lab. Sure enough, those things melt, and it's like it boils the water, melts the hot tub, and it gives you a bunch of gooey plastic that catches on fire and then impedes on, in this case up here, on the fence, and in other cases on the windows or the eaves. And so those need to be on a non-combustible surface 10 feet from your home, and then you should be okay. Pergolas, privacy hedges, decks, anything combustible around your home. So 5 feet is the magic number where we don't see impingement onto the home. And we do say that if it's a combustible deck, that 5 to 10 feet is non-combustible. So you replace the boards, just like we're talking about the fencing. You replace it with something non-combustible where it attaches to your home, or just build a non-combustible deck. Oops, I was supposed to show you my circles. Can skip that one for now. So what can you do about it? This is actually the first wildfire prepared home. It's a rebuild in paradise. It looks a lot better now, the vegetation. This is right after they finished. So when Casey sees this slide, she says, show it with all my trees and my vegetation. You can have a beautiful home and still have a non-combustible zone 0. You can have shade trees. You can have all kinds of vegetation. But we look at first reducing your exposure. So that's not just the 5 feet where you want to remove or relocate things out of that zone. It's also replacing like your fence or your gate the last 5 feet and reducing. If you have really dense vegetation, we want to look at laddering. So if you have beautiful oak trees and you want to have overlapping canopies, keep them 5 feet from your home and then don't plant anything under them. Oak trees don't really like anything under them anyway. And then the next one is increasing the resilience of your home itself. So I have a slide that explains that better. You saw this from Emily. We do give 2 levels of designation. This bottom one, base, is excellent for ember protection, but not for radiant heat and direct flame. For that, home to home or radiant heat, if you're right against the interface, you need to have a plus home. So we just finished a study. I sent it to Miriam, so she can probably send it with the slides with Headwaters Economics for rebuilding specifically in the LA area. And it's 3% more to go from 7A, which you have to do in a very high, which I think entire area of Palisades is in, to a plus home, adds 3% to the cost of construction. And I'll show you a chart. This is just more on the 5 feet. Just to reiterate, I know I'm spending a lot of time on it, but it is controversial, and I'm afraid that the Board of Forestry is going to compromise on some of the requirements, and then people are going to be disappointed and not be able to get insurance. But this is how we determined it. Besides ground truthing it, when we shoot embers at homes, whenever we do it, you get this Venturi effect of accumulating embers. They don't go out, they pile up and they get hotter and hotter, and they create enough heat that can ignite anything, even well-watered vegetation. We're currently testing different types of vegetation, even though we know we can't really make a lot of headway with that because there's so many types and arrangements of vegetation, and something in zone 0 is going to become anything in zone 0. But we're doing it just so that we can speak credibly about it. I'm not going to show you that video. Okay, so here's what you have to do for 7A in that middle column, those check marks that you see. And then to get to Wildfire Prepared Plus, just takes a few more things. So you have to cover your non-combustible gutters with non-combustible metal mesh. Your exterior glass, both panes need to be tempered instead of one pane. KB Homes just did an entire development to Wildfire Prepared Plus. They said it costs $75 extra to get both panes tempered. And then appendages and protections, like our projections like decks, those have to be non-combustible. The reason you don't see that in 7A is just because it's not covered. It's not considered a home construction, so you won't find it in the building code. And the same thing with detached accessory structures. So this one's pretty tough for people. I went with the SBA when they were doing their tour. They did 16 sessions in both fire areas, and we're talking about mitigation. And I did talk to a lot of people. It has to be 30 feet if you want an ADU from your home, if you want a plus designation. But again, we're testing that. We're trying to get it down to 10 feet if both the ADU and the home are built to plus. But I talked to some people who were getting pretty creative. A couple of them were building with flat roofs and putting the ADU on top. So wildfire is unique. It's not like the other perils that we've tested, where one home making the upgrades can survive. It really does take a community. So the other thing that I wanted to stress with all of you was that if you can, we're looking at how we could even designate, so maybe insurance would give a deeper discount to clusters of homes. So we do have another standard I'm not talking about right now, which is wildfire prepared neighborhood, which KB Home did. It's in a very high fire hazard severity zone in, it's called Dixon Trail in Escondido. They have, Victor might be able to acknowledge something about this, but they have insurance all in the admitted market. And it's pretty good rates. Everybody's happy. Across the street is a home on the fair plan that pays $18,000 a year, and these people pay $1,000 or so. So it really does work. And if you can do clustering, we'd love to work with you on that, on how we might be able to give quasi neighborhood designation.
Yeah.
Let me give it back to you, Miriam.
Thank you so much, Laura. So that's great. We're going to go quickly to Passive House Network. I think it might be the shortest presentation we have, but I do want people to hear about that because that's not specifically for fire hardening, but it does effectively turn out to be fire hardening. But Laura, quickly on two issues that you raised last. One was that 3%. So to go from 7A standards, which is the local zoning code, to your plus IBHS plus standard is an increase of 3% to the home builder. 3%, let's say on a $2 million build would be about $60,000. We can come back to you, but there is something called the Delta Fund, right? And that's something that you guys work on. I don't know that there's enough in that fund to cover everybody, but just conceptually, I want people to know that if you invest that extra 3% to increase your resilience up to the IBHS standard, there are pots of money that might be able to help. We are working with our state assembly member and senator to see if they can come up with some sort of money. I think you all know Prop 4 might be a place where we can get that kind of money, but also your Delta Fund, the delta between 7A and IBHS might also be interesting. So we'll come back around to that. And then on the clusters, this is something, Christina, you can speak to too. We've been talking here at the Pali Recovery Coalition, we've been talking to the community about technology and its role in resilience. And that can be individual home resilience, but it can also be community resilience. And so that does effectively create a cluster, right? So if you were to take a series of flat streets in a neighborhood like the Palisades where they've completely burned down, and you ask people to adopt a community resilience program that is fueled by technology, not fueled, but that's, enabled by technology, that could create a cluster that is even more insurable. So I want to come back around to that. Christina, you mentioned Ember's Protection Services. They were actually on our Zoom last week. So we did learn a little bit about them. We had a few people on the Zoom. Okay, so Susie, just tell us about a passive house. It was never meant, or I don't think never, it was not meant to be resilient for fire, but it is effectively. And I'd love to hear about that because I think that goes to the layering that Victor was talking about, that it's not one magical thing that makes you insurable, but if you have these various components, these layers of things, you can be insurable. And I think passive house is one of them.
Hello, I'm sorry I can't see everyone. I'm Susie Harris. I am here in Los Angeles, and I am the community coordinator for the Passive House Network, which is a national nonprofit. We're actually an education nonprofit. We teach architects and builders how to build passive house standards. I have Darren here with me, Darren Dusan from Joubert Homes, and he has experience both in Southern California, but also in Colorado. So he will be doing most of the talking, but I want you all to, my goal really is just to let you know that Passive House exists. We've been here for about 30 years. The buildings that were built in this methodology are performing the same way 30 years later. And the fact that an airtight home has few places for embers to enter, particulate, right? Wildfire smoke, traffic, smog, right? All of these things to come in is in a way a happy accident. The goal initially was to be energy efficient, which it is. And Darren, I think has some slides that you can show. Yeah. But really, by performing these builds in this manner, you're not only saving energy and barely needing any solar panels, but you're also having a healthier indoor environment, a healthier environment for your neighbors, particularly if you build all electric, which is very easy with Passive House. In fact, folks find that even with their EV, their cars charging and everything else, they barely need any solar panels. But it's also resilient in the let's say we have 6-7 days without power sense of the word, where you're in extreme temperatures and you're in a home that might be 80 degrees, but it's safe, right? So if you're in a home and it's 20 degrees out, which hopefully won't be happening here, but we don't know, it's also safe for much longer than a typical build or even a net zero build. So that is important. I'm not sure if Darren can share the.
Yeah, I can.
So I just want you to know that I am an interior designer. By trade, I have been doing this for 20 years. When I came across Passive House, I just had my first child, and I realized we should be building this way. And I really just want you to have the information so that you can do your own research. Nothing is 100% fireproof, but if I were to be rebuilding, I would be doing Passive House. And my goal and my finite amount of time on this planet is to help insurers understand Passive House, builders build Passive House, policymakers make it less expensive for us. And so that's what I'm here. So I'm happy to answer any questions you all have. We have chapters all over the country, but this is actually an international standard. So there's Passive House Canada, Australia, you name it. It's happening everywhere. California just happens to be slower on the adoption, but I don't see the screen. Are you sharing?
No, but I will right now.
So Passive House buildings are airtight. The envelope, the walls, the ceiling, the floors, the windows, the insulation, it's super efficient. So all of this is carefully joined by tape. So you don't have air leaks. And when air isn't coming in, you don't have water leaks, right? You don't have smog, you don't have pests, no ants, right? No wildfire smoke, no PM25. So that is something that is really important. But if you're going to have an airtight home, you want to make sure that you have the right ventilation and that you planned for it, right? So when you have the water vapor that occurs from people breathing, dishwashers running, whatever it be, it's not forming into water. The dew point is not happening in your walls. And you need someone who knows how to do this, to design your home and build and test your home to make sure that that's happening. So with Passive House, if you want to go ahead and skip to the next slide.
Yep.
These are all many of the happy accidents, because initially it was all about comfort and energy efficiency. Turns out it's safer. It's much more resilient. It's so cost effective. Depending on where you live, you can save 75%, maybe even 90% on your utility bills. You just,
Yeah, and Susie, I can jump in on that. We have, just to give a practical real world example here in Los Angeles, we have a colleague who has a 3,200 square foot home over in Studio City, 3 levels, pool, 3 kids. So their kids are coming in and out all day long. They both drive EVs. They power 2 level 2 chargers in their garage. And they have 8 solar panels on the roof, and they have no electric bill whatsoever. So that's how efficient the house is, just to give you some sense. And, like our company, I'm with Schubert Homes, this is all we do, is we build passive houses. And the founder of our company was building custom homes for 30 years during peak COVID, was educated in passive, and basically was like, in good conscience, I can't go back to building any other way. This is just how houses should be built. And I want to make it clear too that this is, people have a sense. I have a lot of smart friends, and when I started talking to them about passive houses, some of them are like, "Oh, those are those earth dome houses." Those are like, no, they're not. This isn't tethered to any sort of design style, aesthetic. You could have a craftsman, you could have a Spanish, you could have a mid-century modern, you could have a contemporary. It's not that, it is not tethered to that.
Okay,
It really,
Darren, I'm going to just quickly say, first, let's try to keep to the 10 minutes. If we can, Susie, let's go through the elements of a passive house. But Darren, I wanted to finish that thought. I think that your friend who lived in a fire zone, there was, I remember you telling me there was a fire, and the homes that were passive were the ones that did not burn. Is that correct?
well, yes, that is correct. I mean,
Okay.
to be clear,
Stay on
no
the
house is
insurance side.
fireproof. However, I mean, in the Palisades, I think everybody's familiar with that house on Iliff that went all over the news that didn't burn, which was a passive sort of a house built with passive features. And the real central thing to understand for insurance and for wildfire is the fact that the house is built with an airtight envelope.
Mm-hmm.
So that's sort of the central piece of passive house. And by doing that, you have a ventless roof construction. There's one vent for the whole house. In the event of a wildfire event, that can be either electronically or manually closed. Your house is then essentially airtight. So those embers are not coming in. As Laura and others have alluded to, I talked to 4 or 5 different firefighter captains who made it very clear that 2/3 to 75% of the homes that burned in these 2 fires, in all likelihood, burned from the inside out, from embers coming in through the roof vents. Those embers don't just kind of waft in, they get pulled in because of that heat differential. But with the passive house, that simply doesn't happen.
Okay. So do you want to keep going? I think the other thing about the passive house was that the soot. So if your community burns and there's soot and ash, it has less of an opportunity to go in. So even the people who are remediating would presumably be remediating less.
That's correct. And with that airtight envelope, some people ask that question of, well, what is that? Does that mean there's no fresh air? No, I mean, we understand the Palisades in particular, that fresh ocean air is important. The indoor air quality of a passive house is probably the highest on the market. It's constantly being recirculated and filtered at a really high level. And with what is happening and what is going to be happening for the next several years in all of our fire affected communities in LA is a lot of disturbed earth and a lot of, we've already lived I'm from Iowa. I've been here 30 years, the dustiest place I've ever lived, but it's about to get a little dustier in these communities with all the construction that's going to be happening. And with this kind of a home, you are guaranteed to have the highest IAQ that exists. That's achieved through what's on the screen right now, an ERV with a really robust filtration system. I want to also be clear, this is not experimental. We've got big buildings all over the country and all over the world that have been built with this, apartment buildings, museums, government buildings, universities. There's a robust network. And with all the wildfire risk that is coming at us, and as has been alluded to as well, I mentioned previously with the insurance companies, California had a crisis before these fires occurred, and it just continues. We strongly feel that these houses are the best answer to this problem, largely because of that airtight envelope. The IBHS plus, those categories are terrific. I mean, I personally feel this is taking that even another notch up by building the house with this methodology. And we can go in, I'm happy to go into more detail. I just blew past that slide. That is the house on Iliff that was kind of made famous after the fire that didn't burn. Everything around it on the Alphabet Streets was destroyed. I will not say that these are fireproof houses. It just isn't the case. But we do feel they offer the best resilience and protection that is out there right now for a wildfire event. Those ember resistance, the smoke damage, that's another big factor. I have some friends who live on Chautauqua in the Palisades, right as it kind of curves around over Sunset. They did not lose their home and were initially thrilled, and now are having to take the house down to the studs on the interior, encapsulate the studs. They're looking at hundreds of thousands of damage from smoke. And I know for the insurance companies, this is a pain point as well. There's obviously because of all the losses they're going to incur, and then also because of the difficulty in quantifying those losses and the difficult circumstances that can provide for some of those insurers and the insurance companies. We really hope that our objective would be to see a carve out or a consideration for this type of building methodology from the insurance companies, particularly somebody like Mercury, which is a California-based company that has such a home and a presence in California and has made great efforts to try to stay in business and respond to these kinds of catastrophes from Paradise to Southern California.
Okay.
Yeah.
Sorry. I was going to say, Susie, is there a passive house network certification out there? Can one get that kind of, okay. And
Absolutely.
so for
And you
Victor,
should. And you should. In my opinion, it's worth getting certified, getting your home certified because you know that it is performing the way that it was designed. It was built to perform correctly, and it actually has proven its temperature, its air quality, all of the aspects that we're going for have been tested. So I wouldn't go with, I would say half measures avail us nothing. Go for it, get certified, know you have what it was initially designed.
okay.
And to
then
be clear, that certification process through a builder, a qualified builder, a certified builder, there's rigorous documentation at every stage of the building of the house. So you as the consumer, as the homeowner, know that your builder is delivering what has been promised to you.
Yeah, it's a third party. So we have a design competition and we're announcing the winners next week. So you are all welcome if you're in the area on Tuesday. Just make sure to register. I put the link there. We've asked for people all over the world to submit passive house designs in craftsman, Spanish colonial, mid-century modern. So you get to see the winners and see perhaps something that looks like home to you. And that happens to be passive house. And we want to have, it's a catalog with these designs available to you all. So these winners will be in that catalog along with all of the other submissions. Please come. We would love to see you.
thank you, Susie. Thank you for putting that into the chat. And everyone, please go over to the chat and take a look at that. So I've tried to aggregate all of the questions. I'll try to get through as quickly as we can. I'll also pick up all the questions that are in the chat and I'll send them over to you in an organized way to see if we can answer anything we don't get answered now. Just quickly, Victor, do you as an insurance company recognize Passive House Network certification? Is that something that's on your radar?
No, we don't, but I was on LinkedIn looking to connect with Susie so that we could get some information and add it in because I think it certainly resonates with us. So it sometimes things move a little bit slower in California, but when it comes to adding in discounts, we usually can get that through pretty quickly. So I'd love to. I've already messaged the team internally about it, and I'd love to get a bit more information offline. Oh, great, your email. I will send you an email right now.
Excellent, you guys. So some of you, all of you have touched on this idea of aggregating, whether it's for insurance as far as clusters, and there's a question in the chat that refers to the same thing, if people come together and build insurably. And then we also know that a lot of the builders who are focused on Pacific Palisades are putting together packages, right? Whether it's called the case study or Habitat is doing it, the Builders Alliance is doing it. I just got to see their website as it's being developed today. So they're putting together various kinds of finishes, various sorts of architectural style, various elevations. And they're presenting that to the community so that people don't have to go out and find architects singularly to pay to create unique designs. They can choose from these catalogs and then pick a builder and have the builder come and build it. Are those people connecting with you, or do you have a way to connect with them so that these sort of catalog options that are being made available to Palisadians, I'm sure they're somewhat attractive to Palisadians because the deal is that the cost will be a little less. Do they work with you? Do you have a way of making sure that the ones that are in the Palisades are incorporating fire resistant either materials or strategies?
The passive house catalog?
No, I mean, I think maybe Christina, you might know, but I think Laura, you might know the builders who are aggregating architectural styles, yeah, and bringing them to the Palisades so people can choose. Their idea is that if they have a few people building with one company, they can scale it and it'll be a little bit less costly to the builder, to the homeowner. But do they come to you to, or can you go to them to make sure that they're incorporating resilient standards?
We are working with a number of those collectives, and as well as individual architects, we are trying to get the word out. I do the plan reviews. I did that when I was with the fire authority. So we've created a toolkit they can use with plan notes to put on the plan, an IBHS stamp, letting everybody know they're built to that standard or they're trying for that designation.
Okay. Another question that comes up all the time is infrastructure. So around us here in the Palisades, infrastructure sort of failed, right? Where we thought there would be water, there wasn't water. Where we thought there wouldn't be brush, there was brush. And that had a lot to do with how things burned. Um, when you, Christina, you might know this, Victor, you might also, as far as risk assessment, so we understand that insurers insure once they do an assessment of risk. So there might be a positive assessment of risk when you look at when you look at a community like Pacific Palisades, which is building back from the ground up and presumably more resilient than it was before. But there's a wild card, and the wild card is, will the hydrants work? Will brush be cleared? How do you deal with that? How does insurance assess that risk?
Yeah, I can speak a little bit to it. Again, I'm not an underwriter myself. However, I probably could and should be certified as one with all the conversations that I have on a daily basis. There's not really anything around it's really out of the scope of our control, and I think our carriers control. What we're looking for on the underwriting and assessing the risk is accessibility to the home. Is it a 2-lane home? Is the home located in a cul-de-sac? There's not really too much conversation as to whether is there water in the fire hydrants or not. That conversation never really previously took place. I'm sure it's going to be something that it could definitely evolve in the conversation. It's more from the underwriting side of things. It's really about each location and the characteristics, the updates in the home, how new it is, how recently it's been renovated, things of that nature. So when it comes to, again, the fire hydrant situation, it's not something that underwriters are really even kind of factoring in their decisions, just because it's so far removed from what we have control over.
Okay.
I can give a little bit more color on that, at least for Mercury. We do look at, so our underwriters visit the field and we look at what the area is doing in terms of fuel management. We also assess a local fire service in terms of their capabilities and the likelihood of mutual aid having an impact on their firefighting abilities. All that said, and that's used more to determine how much product will sell in an area. It's not really something that as directly will influence rates. It will through some modeling, but I think one point I want to make with this is all the discounts I mentioned and the things that we look at on an individual structure are generally passive things. So I'll get questions from time to time about using an active system. My parents have a home and they have a system that sprays fire retardant gel all over the home if it detects a fire. We don't put much stock into that or rooftop sprinklers or other things like that are not as reliable. So we like the idea of investing in features of a home that are, I normally use the word passive, but it's also making reference to the passive house concept. But we like houses that in extreme conditions aren't reliant on people or technology to kind of jump in and solve everything for them. They need to be pretty passive systems. So at least for us, those are things that we will always provide more of a discount for or have more confidence in, because in extreme conditions, you don't know what's going to happen.
Interesting.
And
Good.
Miriam, just really quick to add that the two things that I will kind of go around the fire hydrant situation is we are asked by underwriters, how close is the closest responding fire station? How many miles? And is there a fire hydrant located, within 1,000 feet of the home, or is it over 1,000 feet? Those are the only two that really kind of pertain to that. But again, nothing is there water in said fire
Right.
hydrant?
It's not concrete. Someone in the Palisades who is building, ended up realizing that they have to pay an extra several $100,000 to make sure that there's a hydrant within 500 feet of their home. So this person reached out to the city and said, is this in fact true? Because that's a big chunk of expense that we weren't expecting. And then, was sort of tongue in cheek saying, what difference does it make anyway? There was no water in there. So it's interesting that insurance companies do want to know that there's a hydrant within 1,000 feet. I want to quickly go to people who are either on fixed income or low income, and they were impacted by the Palisades fire, maybe the older people or whoever, people that are on fixed incomes who were impacted by the Palisades fire, who are attempting to build back. I just want to touch on that quickly. You guys said that you can find the admitted insurer, right, who will assess risk in a certain way. And if you cannot be insured by those admitted insurers, that you would then have to go to that surplus line market, which isn't guaranteed, and the prices can go up and down. Emily said there's no cap on the prices. Okay, just let me close this circle for a second. Let's say we've got a family or an older couple or a family that's on a mixed income. They lost their home and they're doing whatever they can to be able to build back, right? So money is an issue, right? Costs are an issue. They will not be able to do the plus, let's say, even if it's a 30 or 40 or $50,000 addition, it's a challenge to get there. Presumably they're going to end up in a home that's going to be tough to insure, right? They're going to be shopping it around. Let's say they end up with one of the surplus insurers. What can we do? How can we advocate as a community, or what can you do as the insurance industry to make sure that these kinds of people can still find affordable insurance so that they can stay in communities like the Palisades? Can
Yeah,
there
I'm
be
happy to hop
carve
in.
out? Can there be a subset of like, yeah, tell me.
Yeah, there's a lot of flexibility. So and again, kind of going on that surplus line side, there's a lot of flexibility, and that there we can design what's called a stop loss or a stated amount policy, meaning that, it's agreed upon at the time that we write it that the policy is going to pay out up to X limit. However, you want to divide your coverages out, and that there is an expectation that there's some self-insurance involved on their end if you're going to be underinsuring it. There's also layering where we can use the FAIR plan almost to act as a $3 million deductible and build excess fire on top of that to make sure that we're staying cost effective. There's, again, outside of what you can do from a mitigation standpoint, whether it's doing passive housing, whether it's, rebuilding with the right materials to make it, much more qualified to withstand a wildfire, the pricing is going to be the pricing, and that's deemed by each insurance carrier. Obviously, as we mentioned, admitted is always going to be a more competitive advantage. That's all we have a due diligence to check the admitted marketplace to make sure that, hey, you're getting declined by all before we even approach that surplus line side. The FAIR plan has grown exponentially. It was up to 370,000 homeowners as of last year, which was more than double what it was 5 years ago. And the reason being is because the FAIR plan started becoming the most affordable option for folks. And they are actually projected to take a 30% rate increase going into next year. And I think that a lot of folks are going to start seeing those premiums reflect a lot of what surplus lines and E&S contracts started looking like, a couple of years ago. But the reason why we've seen so much growth with the FAIR plan is because of folks on fixed incomes and budgets. It was the only option to satisfy their lender to still have coverage on their home that was within that budgeting threshold. So again, it's really going to be a take and give from homeowners doing due diligence. I've said this a lot in conversations that where we're moving is high deductible plans. Kind of what health insurance did 15 years ago. Having a $10,000, $20,000 deductible is not going to be that uncommon. And it's also going to put more premium dollars back into individuals' pockets and also help alleviate making some of those smaller claims. Because at this point in the game, homeowners insurance is really now thought of as that catastrophic loss. It's no more, $6,000 in water, or you have $1,000 deductible, you make your claim and all as well. Those days are pretty much behind us. I think we've evolved past that. So kind of shifting the mindset of how to use insurance is also going to play a part in the overall pricing factor.
Okay, a question about bridge insurance. Forgive me if I don't exactly understand it, but let's go. So people are rebuilding. It may take time. These rebuilds might not be quick. Insurance companies give a finite amount of time for you to be able to rebuild. Are there bridge products to get people through their rebuild period of time? So while they're rebuilding, are those homes going to be insured or insurable in a high fire severity zone?
Yeah, so that's what's referred to as course of construction builder's risk, which is covering the overall project during construction. So everybody should obtain a course of construction or builder's risk contract to cover that project. And then once the home is completely built, it shifts over back into a homeowner's insurance product. Very different contracts. Pricing is very different on both, obviously, because the risk is very different. But that's the type of insurance I'm assuming, but we mean by bridging in the sense of it's not a fully built home yet, but here we still have insurance to protect materials that are left on the land or the labor and so on and so forth.
Well, you guys had said that insurers can't drop people whose homes have burned for 2 years. So next time your renewal comes up, they can't drop you, and presumably for another time after that. But if you were still building, you would need bridge insurance in that interim.
If you're dropped by your insurance company in the meantime, and if if you're anticipating it takes longer than that, then you could potentially just have that policy. You want to make sure you have liability insurance on your lot throughout this time. But the break that you would need that bridge for, can be concerning because you'll need to then, shop around for a new HO3, right? And that's where we see these big price increases. One thing I wanted to just thank you, Christina, so much for your answer to the last question. The big point is that, the sustainable insurance strategy that the Department of Insurance put in place, and recently, and some recent legislative changes were to open up the marketplace, but they really did focus on availability only, right? And so the concessions were made where insurance companies can use predictive models. And a lot of this work is to have more options out there, right? With the strategy that if there are more insurance companies that are willing to come into the area, that's what's going to drop the price down. But we're not feeling that just yet, right? And so just keep in mind that raising your deductible is the biggest lever you have in keeping insurance on your home and trying to keep it affordable. You're on mute.
Thanks, Emily. A couple more questions. Can a standing home built in the 1980s retrofit in a way that would come closer to a passive house standard? So I want to build on that a little bit, because one of the things we talk about is people whose homes are standing and they are remediating and they're moving in. But we always say that you're only as vulnerable as your least protected neighbor, right? You guys are talking about an urban conflagration. So if your neighbor's home is standing and they remediated and they're moving back in, that home presumably will be far less resilient to fire than the newer ones that are going to be built around it. Susie A, is there a way to go ahead and retrofit a home and make it passive? And then B, for you all, can you think of a way where there would be incentives for people to increase their resilience so that they can also be insurable and that they're not the missing link for their neighbors who are trying to find insurability? And I think this goes to pooled community-based insurance. It's basically, if you're judging the entire community, how prevalent does resilience have to be? Susie, can someone retrofit? And then the rest of you can talk about the pooling.
Yes, you can definitely retrofit. It is more expensive to retrofit than to do, start new construction. So I would assume many of you, if you are retrofitting, it's possibly because of smoke damage, or just to protect yourself, but it is possible. And once you are rebuilding, once you have rebuilt and you're in a passive home, your neighbors can continue to build and have the soil and everything else in the air, and you know that you've got a clean interior.
Yeah, Miriam, there's also a specific program called an interfit, which is it's basically a certification that is provided to a house that's been retrofitted for passive. So there is a route to make that happen, and it's fairly well defined. But as Susie said, I will, and it's depending on how extensive you're talking. I mean, it can be a little bit expensive to take an existing structure and completely retrofit it. But yeah.
But still, every move will help, because again, these are going to be the missing link homes when everything around them builds up in a more resilient way. Is there a movement towards pooled or community-based insurance models? And Laura, I still want you to talk about the Delta Fund, but pooled models. Victor, is there something? Will you come and look at a cluster of homes and say, oh, look at that, I'll pool their insurance?
Well, we will look at the homes and we'll insure more if we feel that collectively they've done things. We'll also offer additional discounts beyond what I've already mentioned. So Laura earlier was talking about the Dixon Trails community, which is a new development down in Escondido. There's 60 homes there, and they're all grouped together. They're all built to a very good standard, and we told the community and KB Homes who built it that we'll insure all of the homes. Now, that is not a normal thing for us to do. by some measure, that would be considered a bit risky to kind of pool all the risk in one area. But I think with wildfire, you have to take what looks like a bit more of a gamble where you have a bunch of homes that are clustered together, but if they're all safe, then that might be quite a bit safer than your average community. So those homes are still all insured individually. They all buy a policy from us individually. But as long as they can maintain that sort of collective commitment to the standards that they started with, we will continue to insure those homes. We will continue to offer a pretty good rate. I think Laura said the average rate is like $1,000. It's actually too low. Just full disclosure, it will go up there, but it'll still be probably. My hope is will be quite a bit lower than anything else they can get, and it's a full policy. It's not just fire, but it's all perils, like a fair plan. So I do think insurance companies look at that. I don't know that I've seen quite as much success as I think would be interesting in really taking more of a community-based approach, but it is something that Mercury's been working on, and we hope to have some things in the future on that.
Okay. You talked about exposure in a certain community, right? So you said if you're an insurance company and you're carrying a lot of policies and individual homes might look safe, in the end, if something catastrophic happens to the community, you've lost it all. If you were to look at these cluster models, these pooled or community-based insurance models, would you see that as multiple points of exposure, or would you see that as one point of exposure?
No, even when insurance companies, generally speaking, look at this, they don't look at a point of exposure. They look at total insured value. They look at the amount of value of the assets that are at risk for that event. So you may model many, many fires, thousands of fires happening in different areas, and through that you develop some probabilistic view of what's likely to be lost in a fire. And if it's one house worth a lot of money or it's many homes worth very little. They sort of get pooled together based off of the potential fire footprints that you might have and the expected damages that you incur at those homes. So as you have homes that are more mitigated and more resilient, the predicted damage for that same amount of value goes down, which means you should, in theory, be able to write more homes in that area because your expected loss goes down as well.
Got it.
But it's something that insurance companies have to be careful with because just to give you an example, we insure probably around 600,000 homes in California, maybe more than that. And in the Palisades and Eaton fires, we lost about 700. And for us, that was over $2 billion in losses. So and we bring in about $1 billion a year in premium, and that's for all types of losses, not just fire, for everything. So losing a very small amount of an insurance company's homes has a very large effect on it because we insure over $1 trillion worth of homes, but we bring in about $1 billion in revenue for it. So companies have to be very careful about how much they're insuring in any one area unless they're very confident about the mitigations, the work the community is doing, and other factors.
Okay, great. That was really interesting, especially because I was going to say we asked a couple of other insurance companies to join the town hall, and while we got a few maybes or inching towards yeses, we didn't ultimately get there. And so you did come to the table, which I very much appreciate. And I'm wondering, you get a lot of calls from Palisadians there's a question also in the chat, will Mercury insure homes valued at over 3 million? And I'm wondering, are you getting a lot of calls from Palisadians because you seem to be someone that's at least willing to be at the table and talk about resilience?
So I think in Palisades, we've actually not been writing new business for a while. We had reached a point years ago where we felt we had a lot of homes in the Palisades. And we don't typically take the approach of non-renewing large amounts of homes because we feel we've written too much. So once we get to a certain point, we just stop accepting new homes until there's some churn in our book. At the same time, as we buy more reinsurance, as some of the commissioners' changes go through with the sustainable insurance strategy, it does allow us to open up in more areas. So we'll definitely be coming back to the Palisades. We'll be writing more homes. We hope to keep the customers that we've been insuring as they rebuild, if they do decide to rebuild. And I did want to comment on something you asked about earlier. Does a fair plan have a cap? I think that was a question that you had. So the FAIR plan, so insurance companies, private insurance companies, we have surplus or capital, or we have money that we set aside to pay for claims. The FAIR plan does not work that way. It's not a traditional insurance company. The backstop for the FAIR plan is us. It is the insurance companies. And if that doesn't get quite far enough, there's other recourse. But a company like us has about $100 million in losses from the FAIR plan. That's part of what has made insurance companies that are larger a little bit nervous about their place in California, is that the FAIR plan loses a lot of money. They recoup that money from the insurance companies based off their market share. So the bigger you are, the larger your share of the FAIR plan's losses. Now, insurance companies now are allowed to recoup some of that money. And there was an assessment that I think got a lot of publicity. That's a small percentage, relatively speaking, of the overall assessment to insurance companies. So their backstop is us. And we don't have something like that where if we run out of money, we can turn around and assess other companies like that. So they operate a little bit differently in terms of a cap. They don't really have one.
Got it. But just quickly, that means that if you don't insure, people have to go to the FAIR plan. So the FAIR plan has to be a never-ending sieve.
Yeah, so either way, if you're in California, I think the way some insurance companies look at it, you're on the hook. If you say no to that customer, they go on the FAIR plan, you're still going to pay for those losses when they happen, but a pro rata share.
Got it. Okay. This is an interesting question. It's come up over and over as we begin to see framing go up around the Palisades. I understand that there are 300 active builds around the Palisades, which is quite a bit. The question is, if my house is a typical stucco house, but with steel framing instead of wood, does that qualify me for a type 2 construction for the 50% discount? Again, I'm going to take this one step further. People who are rebuilding and framing with wood, is that a negative thing? Is there something else they can frame with, or is that sort of standard? And then what goes around it, the stucco that goes around it, has to be something that's steel or uncombustible?
I think a few people will have an answer for this one, but from Mercury's standpoint, it's okay. It's fine to frame it with wood. A lot of it depends on what you do around it, and I think the IBHS standards give you a lot of good clues to that. I think the passive house standard gives more clues. You can build instead with concrete and steel, and for companies like us, we'll provide a larger discount for that, but that's not for everybody. So I think there's more than one way to get there.
Okay, and then the question about framing, if I'm framing steel instead of wood, does that qualify me for a type 2 construction?
Let's see, I think you have to make sure that the roof as well doesn't have any wood in it, but generally speaking, if the house is built with non-combustible materials, I believe you should qualify for that. I did put a link in the chat. I wasn't sure, Miriam, if I should just start answering the Mercury questions in the chat. I can do that to save time. I'll start answering them. But if the construction is deemed non-combustible, it's typically steel construction or concrete, and that's carried through the whole way, then yes, you should be able to achieve that standard. But I'm not an expert in that space. I just know that type 1, type 2 for us, if you meet that criteria, you're good. But honestly, you should probably speak to someone who knows more about that.
Okay, and that brings
I
us
can
to
chime in
Venbrook.
a little bit on that. Type 1 and type 2 construction are you talking about per the building code, Victor?
Yes, I know yes. Yeah.
Yeah, so type 1 and 2 construction is absolutely no combustibles, and it has to be a certain gauge steel. Usually the lightweight steel they use in framing wouldn't qualify. And I will tell you, we've tested both homes with wood framing and steel framing, and with the non-combustible wrap and all of the other elements, they perform the same.
Excellent to know. So no difference. So when people are alarmed that they're seeing wood frames go up, I can say that it's the wrapping that makes a difference. Okay, so Christina, the question is Venbrook a broker who assembles several insurance options? I'm assuming yes, right? You can help people get creative about what's out there?
Yes, absolutely. So think of your direct writers as your State Farms, your Allstates, your USAAs, AAAs. They are only able to bring their insurance company's products to the table or fair plan. Independent insurance broker, we work with a lot of different insurance carrier, both on the admitted side and as well as on the non-admitted side. So we are able to bring, my goal is always to bring a few options to the table and go through, because usually a lot of the options have very different premiums attached to it. And we talked, someone had mentioned this earlier on, The contracts can also vary. I use this analogy a lot, but it's very much like a used car sales lot where, everything is a car. They all have four wheels and a tire, but they're going to drive very differently from point A to point B. So it's really important to know what policies you're buying, how they're going to perform, what's included, what's excluded, why the premiums are so different, what the loss settlement looks like. And that allows us, again, to bring those options to the table, but it's on the broker to do their due diligence to be able to educate the client in what's being provided to them.
Perfect. Thank you. All right. Can we touch on Zone Zero for a second? It is a controversial issue in the Palisades. Some of you touched on this. There are lots in the Palisades that are large, and Zone Zero does not pose a huge problem with landscaping. But there are lots in the Palisades that are narrow or long or very close to each other. And for the most part, those were the two flat areas, the flats that burned the high percentage of those areas burned. Zone Zero is not popular in those areas because if you cut out 5 feet on this side of the house and 5 feet on that side of the house, you're asking people to really have what has been characterized as a moonscape. Victor, you said something about, if you have well-hydrated vegetation around your house, that's something that can be considered. I think others spoke about Zone Zero or Zone Zero directives. We can go back to that. But Victor, does the insurance company come out and make sure that some of these mitigation measures like well-hydrated hedges are actually in place?
Yeah, so I would want to add a few more conditions there. For us, we're still formulating this, but there would be a lot more conditions, and one of the limits would probably be on the height and the types of plants. I'm not sure if you'd get something as high as a hedge, and it also would only be in certain areas. So it's not going to look quite as if you're imagining having something in the 5 feet for a company like us, it's probably going to be more restrictive than you might initially be assuming. But it is something that's a business decision that we're making as a company. I think that's going to be a little bit unusual. At the same time, we're going to be working with you every year to see how you're managing it, maybe even more often than that. So our view is if you're willing to do the work and have the right structure features and willing to kind of jump through all the hoops we're going to throw at you, then maybe there's a way for you to sort of have your cake and eat it too, but it's not going to look exactly like the cake you may have envisioned, but it might be better than the alternatives that are in front of you. That's just again, I have to be really clear, that's just us. I don't know what others are going to do.
Okay. So Laura, I want to come to you on this issue. One of the things that we do here at the Pali Recovery Coalition is that we run these things we call vision insurettes, and we do this with RAND. And one of the questions that we ask people is, what trade-offs are you willing to make? So if in your mind you had the perfect house, but it turns out that that perfect house being rebuilt again in the Palisades means you're going to burn again the next time there's a wildfire, and there will be because we're still in a high fire severity zone. Are you willing to make some trade-offs? Not everybody says yes. Some people really do want to build the same house looking the same way with the same vegetation. My question for you, Laura, is you're doing the studies, you're blowing the embers. Is there a point where regulation will come to the Palisades and say, look, this is no longer going to be up to you. If you'd like to be insured, here's the science. You're going to have to do something different. Or is it sort of going to be, well, look, this is what we found. This is what we suggest. Go ahead and build the way you want. And then we end up with a community that's having a hard time finding insurance.
I think there's 3 lanes. So one, the science lane, right? That's IBHS. We test and we say, this is what works and this is what doesn't. The risk is too great. The second lane is the regulation. That's what the Board of Forestry is working on right now. That'll be a statewide regulation. And, it's been all over the board. If you've been to any of the hearings, I'm not sure exactly where they're going to end up. Right now, they have 4 options for Zone Zero on the table of different variations of how much vegetation. And then the third lane is insurance. They can look at the regulation. They don't usually. They can look at IBH. Some do, some don't. Like, Victor might deviate for Mercury. Other ones might stay strict, but it's a business decision on the part of the particular company on what they're going to discount. But you're muted, Miriam.
Thanks. Can you please talk about the Delta Fund or any kind of money that helps people go from ordinary code to IBHS? Because I guess one of the questions out there is going to be, what if we do build to IBHS, but we have great landscaping?
Yeah. Yeah. So the Delta Fund is resiliency company, is active in the Palisades. We're partnered with them. We go to a lot of the trade shows together. If anybody went to Santa Monica last weekend with USG BC, we're doing another one in Altadena this weekend. So we go to all of those and tell them, here's what the standard, here's how you can build the most resilient wildfire home that science offers. And then the resiliency company is funding a grant, and they have a lot of benefactors. They are building that grant up to be, they would like to be able to cover everybody in both burn areas that has to build to 7A and that wants to get to plus and fund that difference for them. So they're looking right now. You can sign up with them and say, we want to be considered. And what happens is once IBHS gives the designation, but we'll work with you through the plan review process, through the entire process, and the designation process. Once you get that, they will give you that difference.
And so it's an infinite resource?
Well, they're hoping it will be. That the way that they're structuring their grant, they're really good at raising the funds, and they have a lot of wealthy partners. They are plugged into all kinds of grant programs and philanthropic organizations and foundations, and they think that they can, that's their goal. That's their goal.
Okay. Thank you.
Can I add one more thing, Miriam, on
Yeah.
the clustering and what
Yes.
if you have one home that survived in the middle of them? When you think about building resiliently and building to plus to resist flames, embers, and radiant heat, if you have a home in the middle of that block and it can retrofit just to base, which is a fairly inexpensive retrofit, then those other homes around it protect it, because now you just have to make sure that the embers flying into the community don't land on the weakest home and
Got
then burn to the other two. So it's not, it doesn't
Okay.
have to be all or none.
So you're not as weak as the weakest link. Good to know.
That's
Okay. So it's 5:06. There's one great question. It's come up before, and I know someone who's anecdotally told me something that relates. I'll ask this question and then I'll let everybody go because we're a little bit over. But the question is basically, is it possible to have an insurer make a commitment before you build? Right. So if you have a builder and you have a certain profile of your home and it looks like it's going to be insurable, is it possible to have insurers at the table here in the Palisades who say, we will accompany you through the rebuild? And if there are models or characteristics that we want to see incorporated into the build, we'll be right there with you as you go through, so that when you're done, we know that you have built a home that we can insure.
At least from my standpoint, we've met with several builders in the Palisades, and we're trying to draft something with them where we basically tell the public that if your house is built to these sorts of standards and these builders do it, we will insure the homes subject to some. See, and this is the part that's going to be dissatisfying, is we'll insure those homes until we hit our limit in the area. So just to give you like an anecdote here, what happened in Paradise is we had told the town there's a certain amount of value of homes we can insure. And it became a little bit of this, whoever gets in the door first gets insurance with us. And we've kind of hit that limit now. And I mean, I don't like it, but I'm not sure what to tell the other residents who have homes that are similar, but Mercury's insuring a lot of homes there now, and we can't really do much more. So we are trying to think of how we can push the envelope or come up with better solutions. But for the time being, there are builders that we're working with that will say, because we've been told by the builders, I can't get these Palisades residents to sign on until they know that they can get this insured. So we're trying to work out something with them. We'll say, yes, we'll insure those subject to us hitting our limit for Palisades overall, but we're going to show preferential treatment to homes that are of those standards. And right now, that's the best answer I can give, but I know it's not the answer people want.
Well, it prompts me to ask Christina, are the other insurers willing to do something like that? I mean, you worked with me to see if they'd come to the table. It was a tough task. Is it possible to get them to come to the table and accompany some of these homeowners who are building and have them build something that is, to their estimation, insurable when it's done?
Yeah, absolutely. And to piggyback off of what Victor said, my initial knee-jerk reaction to your question was going to be about capacity and saturation. That's really what it's going to come down to, that I don't think any one insurer can definitively say that they'll take on, because again, it also goes back to the total insurance value. We don't know, every house is going to be a little bit different. So that TIV it's really going to come down to, if there's $10 billion to spend, it's going to be how we allocate that $10 billion. It could be 10 houses or it could be 100,000 houses, depending on how we divide that fund up. The other thing to keep in mind, and it kind of borderlines the clustering discussion, in that even if a house withstands a wildfire, which a lot of them do because they've done all of the mitigation and they have certain materials that can withstand the wildfire, then a lot of claims that carriers are still seeing come from smoke damage and loss of use coverage, because even if if it's close enough, then there's going to be soot and ash in the air. Curtains, expensive furniture may still have to get replaced. So the contents are still going to potentially be paid out. And then also when you're evacuated from a certain from your home for a certain amount of time, there's also a loss of use coverage that starts to get paid out because you're displaced for a couple of weeks, couple of months. If you suffer a total loss, it could be a few years. So even though if the house is still standing, carriers are still losing money on some of those other coverages built into that contract. So that's something else to kind of keep in mind when you're kind of thinking about who's going to come to the table. The answer overall is yes, there will be other insurers that come to the table. And unfortunately, the power dynamic has shifted where the carriers really get to cherry pick, to Victor's point, who is doing the utmost to safeguard their homes. That's going to be the admitted carrier's first choice. And then, so on and so forth, depending on what materials, saturation, timing of events, and things like that, as to who else is going to come to the table and what that looks like.
Okay. Perfect. So I want to say the more insurers that come to the table, the less risk is spread around, right? And obviously this is a community that is practically building back from the ground up. So it should be an attractive community to insurers because we are going to be much more resilient than we were before, even if everybody just builds to city code. And if Laura's right and there's money to increase that to IBHS standard, then we should be very insurable. So my thought, and the Passive House Network will allow us to be able to build homes that won't have as much soot and ash, so that there's less risk there for the insurers also. So if your house doesn't burn, it's actually less costly to mitigate. All of these things should make us very insurable. Is there someone making that case, whether it's up at the state or it's with the insurance commission or it's with the insurers? Has anyone said that these communities that burn down and build back up are actually super insurable?
I think that is an excellent point. I think that we have been saying that for years, but it really took, as Victor said, it really took the decision maker at the insurance company to come to town, right? And look and see how it is and make that decision and make that bet. And, many times when we're having these conversations, we are having conversations with insurance lobbyists, right? Or insurance trade association representatives, which do not speak for each individual company, right? They don't have that decision-making power. And so it's incredible that Victor's here, but it's not going to be one company's decision. It's, for us to have an insurable community here. In a healthily insured community, we do want many insurance companies at the table.
Okay.
I'll add that, like I said, we're funded by the insurance industry. They are our members. They're our board of directors. We have a back end to our website, and it allows anybody who has a designation. We have 80% of the insurers are members, and they can get in the back end of our system and see who has a wildfire prepared home, and whether it's base or plus. And we get a lot of hits on that site. With the Fortified program, to use that as an example, on the East Coast with wind and hail and hurricanes, they're giving 50% discounts off the entire policy in those zones because Fortified program's been around for a long time. It is a little different, like I said, than wildfire because it tends to, regardless of what your neighbors do, if you build a fortified roof and are a plus standard, then you get a pretty heavy discount because you're not impacted by your neighbors.
Okay. My final question will go, is there space, and you guys can answer me later, but is there a place, is there a window, is there an arena where a community like ours can go and advocate for better rates, for more insurers at the table, because we know that we are making a commitment to resilience? Where does that, Emily, maybe where does that advocacy go? Is it at the Department of Insurance? Is it with our state representatives? Is it with IBHS? Is it with United Policyholders? Where is our voice most potent?
That's a really great question. We'll be able to, if we're talking about advancing legislation that is proposed, right? To like enable the discounts or enable that piece, right? The requirements that insurance companies have to comply with. That's the state legislature, right? Start with your state representatives there. And then putting pressure on the Department of Insurance, that's a really important piece. When we get there, like, more, what we want to see transparency for these discounts. We want to see that just that there's movement and the counter to that is that it's moving a little too fast for them to have a definitive. Victor, for instance, recently during this call said they're going to be changing little tweaks, right? Little tweaks here and there. It's an amorphous thing. So it's all of these pieces. It's all of it together, because it's not just the insurance commissioner and the Department of Insurance that's making this, but the state legislature as well. And and pick your issue. There is all of the things we covered today, there are quite a few little things. It's not just let's make all of it change. There are all these little pieces. So if zone 0 is really the piece that's most important to you, that's the Board of Forestry right now, right? And if it's maybe if it's a different piece there, then we're happy to figure out what the best path is, but there's no quick and easy answer for a lot of these things.
Got it.
But my final thought is that, zone 0, there may be, there's wiggle room right now and we'll see where it lands. But I encourage folks who are rebuilding to be the leaders in this, to show us what it looks like to have a beautiful but safe zone around your house. Because the more we have that and the more creativity and, there's not a lack of inspiration that can be drawn out of this, and show us how beautiful it can be in that safe way. I would say that's the call there.
Okay, wonderful. Well, I cannot thank you all enough. Thank you, Palisadians, for showing up. We will make this recording available to everybody. Thank you, Christina from Venbrook. Thank you, Emily from United Policyholders. Thank you, Susie from the Passive House Network. Thank you, Laura from IBHS. And thank you, Victor, for being the brave insurer who came to the Palisades and talked to the Palisades community. We very much appreciate it. Hopefully, again, this will be the beginning of a conversation, not the end. Thank you all again for coming to see us. On behalf of the Palisades Recovery Coalition, I thank you all. Good night.
Thank you.
Thank you.